It seems that the IEA and maybe the Biden administration don't see eye to eye on what's needed from OPEC.
Well, good morning. No, so in our latest report today, what we're seeing is that the new deal that was agreed last month already goes a long way to restore market balance for the remainder of this year. Oil inventory has, of course, come down sharply in recent months, as supply has not been high enough to meet the demand, the recovery from the pandemic. But what we're seeing now is that the new deal will go a long way to restore balance for the rest of the year. The substantial supply gap that we had seen previously to that agreement being reached has narrowed substantially. So we see more balanced market towards the end of this year.
So basically, based on today's report, it seems that, that you would tell the Biden administration that there's no need for extra oil markets because we just don't have that demand at the moment.
Well, obviously, the spreading of the COVID, the Delta variant, is taking a toll on demand, especially in Asian countries where vaccine rates are low, where there's no COVID, zero COVID policies. And we're already seeing that mobility and demand is being cut in China, in Indonesia, Malaysia. Japan and Korea is also imposing new restrictions to halt the spread of the virus. So we have lowered the demand forecast for the second half of our year. That downgrade, along with the higher supplies from the OPEC Plus group, in July, global oil production already rose by 1.7 million barrels a day. Supply is up by 3.5 million barrels a day since April. And with the new deal, another 2 million barrels a day is set to come to market by the end of the year. So even though there could still be some small, modest stock draws for the coming months, we see the market much more balanced than we did prior to this deal being reached.
Toril, how difficult actually is it to do forecasts at this moment, given that, especially in some of the Asian countries, I'm thinking of China, where there's 1 or 2 cases, whole ports get shut down, therefore curbing demand from oil as well. Are we going to see in this kind of like start and stop situation in terms of demand going forward?
Obviously, the demand outlook is highly uncertain because of the Delta variant. The pandemic has been unpredictable. But we're seeing that vaccine rates increasing across many countries in the world. We're seeing in Europe and in the Americas that the very high vaccine rates has allowed mobility and activity to rebound. So we're seeing strong demand in these areas. Of course, as long as the uneven vaccination rates across the globe means that as the virus spreads, countries decide to take measures to halt the spread, it could have an immediate impact on demand. So this is what we're watching all the time. And I think that there could be further downside risk due to the virus in the second half of this year if we do not get the pandemic under control. But there's also upside risk. We're seeing a lot of pent-up demand, especially in Europe and in the US. A lot of people want to take to the road. People are eager to travel. Economic recovery is very strong. Industrial activity is strong. So we're seeing that demand is holding up quite strongly in these countries.
Last month, the IEA itself was actually urging OPEC to turn on the taps. Was that a mistake?
No, we see, as we said in last month's report, the increase from OPEC Plus really is necessary now to balance the market. Without the increase from OPEC Plus that they agreed in the middle of July, market would have continued to tighten. We would have up pressure on pricers. And now we're seeing that the deal is meeting, it goes a long way to meet the demand for oil that we see for the rest of the year. When we're looking into 2022, however, we do see a risk of the market balance returning to surplus. This is also because we're seeing increased growth in supply from producers outside of the OPEC Plus group, such as the US. The current prices should restore some growth in the US shale patch for next year. But as the OPEC Plus group has said in many of their meetings, they're meeting on a monthly basis, so they have the opportunity to continue, to halt, or to even to reverse the cuts as required by the market. So for now, we think that that the market is looking relatively well balanced for the remainder of this year.